If you're going to come into my world, old guy's world, or the information age, you've really got to understand what is risky and what is not risky. And in my world, if you play it safe, that makes you stupid.
As the world is evolving, the concept of holding cash in hand is becoming obsolete and unreliable due to rising inflation, low interest rate, and economic fluctuations. In this video, we will explore 5 assets that offer superior protection and more profitable returns than holding cash in hand. Number 1. Real estate. Robert Kiyosaki said, "Real estate is an imperishable asset, ever increasing in value. It is the most solid security that human ingenuity has ever devised." What does this mean? Real investing is a more stable and secure investment that makes you a good passive income. But before we look into what real estate investment is all about, let's look at Robert Kiyosaki's investment strategy for real estate.
So I own 7,000 rental properties. Those are assets. Every month, the cash flows in. Whereas many people have the big house on the hill and the cash is flowing out.
Right.
And they're going broke.
Real estate plays a vital role in Robert Kiyosaki's investment strategy. His approach to real estate investment is centered on the cash flow principle and how to channel real estate investment to make passive income. He talked about how investing in rental properties is more profitable than owning a property. Now, let's look into real estate investment properly. Real estate is a land property, including any permanent structure attached to it, such as buildings, trees, etc. Real estate holds several unique properties that make it a more secure and better option than cash. So, what makes real estate a good investment choice? Don't worry, I will explain. One of the reasons you should look into real estate investment is its potential for appreciation over time. As we all know, properties tend to increase in value over the years due to increased population, economic development, and limited supply in desirable areas. Secondly, real estate investment allows you to use the power of leveraging. What this means is that you can buy properties by using a mortgage. This allows you to make smaller investments and benefit from the potential appreciation of the property over time. And as you pay up the mortgage, the property's value also keeps rising. Furthermore, real estate investment allows you to maximize tax benefits. For example, the longer you hold your real estate investment, the lower your tax rate.
What helps with real estate is that you can leverage against real estate easily with banks. That's the main argument for real estate. I mean, all the exchanging, tax-free exchange is great.
Additionally, real estate investors can benefit from tax deductions on mortgage interest, insurance, and property management expenses. These deductions can help you save more income generated from your investment. Here's the interesting part. Real estate enables you to generate a steady stream of passive income. For instance, when you invest in real estate rental properties, you can enjoy a consistent monthly income which you can use to cover property expenses. But that's not all. If you are concerned about having a tangible asset, real estate is here for you. Real estate investments are tangible assets that investors can see, touch, and control, giving you a sense of security and control over your assets. So, how can you get started with real estate investment? The key to any investment is properly knowing what it's all about, and the same principle applies to real estate investment. Learn as much as you can by reading books and attending seminars about real estate investment. Also, starting small is crucial to succeed in real estate investment. You can start by investing in a single rental property and build your portfolio over time. Investing in real estate offers a basket of opportunities, which makes it a better and more secure investment option. Number 2. Exchange-traded funds, ETFs. ETFs are becoming more popular each day due to the plethora of opportunities they offer to investors. So, what are these ETFs? As the name implies, these exchange-traded funds, also known as ETFs, can be purchased and traded on an exchange like a typical stock. ETFs are designed to provide investors access to a diverse range of assets while receiving securities from various companies. This makes it a safer and more convenient asset than holding cash. Plus, higher returns are also guaranteed. Let's examine why investing in ETFs is a good investment.
These groups can be a group of stocks, bonds, natural resources, commodities, precious metals, and so on. Advantages of ETFs. Lower cost. The ongoing cost of holding ETFs, called management expense ratio or MER, is lower than mutual funds or index funds.
Firstly, ETFs are widely known for the instant diversification they offer. What does this diversification mean? Well, it means ETFs allow you to invest in various assets with a single investment. So, how do you benefit from this? This diversification that ETFs offer helps you reduce the risk of investing in a single asset because it provides security across all your assets. As I said earlier, holding cash exposes you to inflation risk, and if you want to beat the odds, investing in ETFs is a great alternative because it has the potential to outperform inflation and provide a higher yield in the long term. But that's not all. ETFs are also known for the transparency they offer to investors. This means that investors can see their assets at any particular time. What this does is that it enables you to see and understand how your investment is doing and also gives you control over your investment. In addition, ETFs provide you with secure risk management advantages, as I mentioned earlier. By diversifying your investment portfolio, it helps you mitigate risk. ETFs are designed to hedge against market downturns and provide protection during volatile periods. Now, how can you get started with ETF investment? The first step to investing in ETFs is by opening a brokerage account. There are several broker platforms on the internet, so make sure to conduct your research before making any investment. Number 3. Annuities. If you are looking for a better way to secure cash after retirement, annuities are a great option. Annuities are another asset that is more beneficial and safer than cash. So, what are annuities? Annuities are contract agreements between individuals and financial institutions, especially insurance companies. It involves a series of regular payments made to the annuitant or investor over a specific period, usually after retirement age. The primary goal of annuities is to provide a steady income stream for retirees, reducing the risk of holding cash in hand. Investing in annuities can also give you an edge over inflation, as some offer features that allow for regular adjustments to income payouts, which helps you keep up with inflation. This can help you maintain your standard of living even in retirement, providing greater financial security in the long term. Secondly, annuities like fixed and indexed annuities offer stability and liquidity. I know you are wondering what this means. It means they provide you protection against market volatility. For instance, fixed annuities offer a fixed interest rate while safeguarding you from market downturns. Indexed annuities, on the other hand, allow investors to participate in the market's upside and protect you against the downside. What's even more interesting about annuities is that they are designed to deal with longevity risk. By providing you with a lifetime income option, you can receive interest for the rest of your life. And this will not only give you peace of mind, but also provide you security over your cash.
With a fixed index annuity, you will never get all of the stock market gains, but you also never get any of the losses. This means you will never waste precious time waiting to recover from a market loss. This is especially important for those at risk of negative sequence of returns in retirement.
Moreover, annuities also offer tax advantages in individual retirement accounts, IRAs, or employer-sponsored retirement plans by providing tax-deferred growth. So, what does this mean? It means that the earnings on your contribution to annuities are not taxed until withdrawals are made during retirement. Now, how can you invest in annuities? Several annuities are available, including fixed, indexed, variable, immediate, and deferred. So selecting the one that best suits your preference is paramount. Secondly, choose an insurance company. As I mentioned earlier, that insurance companies offer annuities, so go for the one you are comfortable with. Finally, regularly review and keep track of your annuity investment, as this will help you ensure that your investment works well for you. Number 4, Bitcoin. The rise of Bitcoin cannot be overlooked, as we all know how it started in 2009 when it was introduced by a group of developers named Satoshi Nakamoto. Bitcoin is a virtual currency that allows people to make transactions without the involvement of a third party. Since Bitcoin's inception, it has gained many grounds and has become the world's largest cryptocurrency in the market. So, how can you benefit from investing in Bitcoin? Bitcoin offers numerous advantages, which makes it a better and more secure investment option. One crucial advantage of investing in Bitcoin is that it offers a decentralized blockchain network using cryptographic techniques to secure and validate transactions. This blockchain technology ensures that each transaction is recorded in a transparent ledger, making it impossible to alter and tamper with the transaction history. It also ensures that your Bitcoin holdings are safe by providing users with private keys that prevent unauthorized access. Secondly, Bitcoin also offers a hedge against inflation because, unlike fiat currencies, Bitcoin's supply is limited to 21 million coins, making it a deflationary asset. This scarcity is what helps Bitcoin stand the test of time.
Currencies offer a variety of user benefits. Some top crypto features may include instant global transactions, security, privacy, decentralization, meaning no third parties to trust.
Furthermore, investing in Bitcoin reduces transaction costs by the direct peer-to-peer nature of its transactions, making it an attractive option for cross-border payments and remittances. In conclusion, Bitcoin investment is alluring because it has the potential for substantial returns. Bitcoin has also demonstrated an enormous appreciation over the years, attracting individual and institutional investors. Now, how do you invest in Bitcoin? You can buy portions of Bitcoin on any crypto exchange platform. For example, you can open a Bitcoin account on Coinbase and invest in Bitcoin by funding the account. But what about the risk? Yes, investing in Bitcoin carries some level of risk due to its price fluctuations, but historical data suggests that Bitcoin has shown significant growth over the years. However, it is crucial to note that the market is highly volatile, so conduct your research before investing in Bitcoin. Number 5. Precious metals. Robert Kiyosaki once said, "Precious metals are the ultimate insurance policy against inflation crisis." Precious metals have been highly appreciated by ancient civilizations and are very much valuable in our world today. Precious metals are another investment option that is way more profitable and secure than cash. Precious metals such as gold, silver, platinum, and palladium have gained traction in this new age. Investing in precious metals has served as a reliable store of value, unlike cash, which is subjected to the decisions and policies of banks. Any government or financial institution does not control precious metals. These qualities make them resistant to economic and political uncertainties. Precious metals are also a great investment choice due to their tangibility, giving you a sense of ownership and control over your asset. Investing in precious metals offers you stability in your portfolio. During market downturns, precious metals like gold in particular perform well when the volatility of the financial market is high and reducing your overall portfolio risk. And guess what? You don't have to worry about its acceptance because precious metals have universal appeal and are recognized as valuable assets worldwide. For instance, gold has been used as a currency for centuries, so investing in precious metals gives you some liquidity and flexibility that cash may lack. Furthermore, investing in precious metals also offers you protection against geopolitical risks such as wars, conflicts, and international tensions, which can have a significant impact on the financial markets and currencies. These benefits of precious metals make them more reliable and a good opportunity for long-term wealth preservation. Cash and assets will always be crucial elements of our organization, but assets will always be superior due to their potential for growth and appreciation in value. You can spread risk and build a portfolio that is well balanced by investing in a variety of assets. Assets have an advantage in long-term financial planning and wealth creation. Although cash is crucial in daily transactions, these assets discussed in this video continue to offer undeniable advantages over cash. By understanding the benefits of assets and adopting a prudent investment strategy, you can secure your financial future and pave the way to enduring wealth. If you enjoyed this video, like and subscribe. Don't forget to turn on the notifications. Check out our next video right here.